What's my risk management when I'm trading a profile account? How many lot size do I use? What's my how much do I risk when I'm trading a profile account? These are common questions that I always get anytime I make a post on this channel. But in this video, guys, I'll be giving you a lifetime lesson that you can't find on YouTube. And I have to tell you that this video is going to be quite long. I took my time this week to write down my experience, so this video is going to be quite long. If you are busy right now or something is taking your attention, I would advise you to pause this video and come back. Make sure you watch this video to the end. And also, if you are a fan of high flash videos of account flippers and strategy stuffs, I think this video is going to be boring for you, because this video is just a pure truth, just me pouring out the pure truth evidence, everything you're going to be seeing in this video. So with that being said, moving on. Now back to the question. Listen, guys, it's not about amount, it's not about lot size, but rather percentage. I'll be teaching you how I calculate and manage my risks in 5 lessons, and if you implement these 5 lessons in the right way, you'll probably notice changes in your trading journal. So let me first of all keep my camera very well, because this video is going to be long. Now, number 1 in this lesson is having a well calculated fixed risk percentage and not random. When I say well calculated risks and not random, let me take me for example. Let me take my experience for example. You see, when I look at my blown accounts and the profile that I breached, I noticed how inconsistent my risks were. In some trades I risked $70, in some I risked 50, and in some I risked more. So my risk percentage wasn't consistent. Risk percentage, I mean, is an amount that I should consistently risk in every and any trade, be it an A or B setup. This was a problem that I knew I needed to solve in a suitable way. So as a profile trader, I had to come up with a suitable risk percentage that won't blow my account fast, even if I take 15 loss in a row. Yes, sometimes bad days even hit you. Bad days even hit you with more loss than that. So after my calculation and my homeworks, the best risk percentage that I came up with, and I trade in any account size right now, is a 0.4%, which in $5,000 accounts that people commonly purchase right now is $20. It is small amount, but you get to understand the magic of this small amount. And just like I promised that I will be sharing you evidence of anything I'm saying, I will share you a screenshot record of my 1 month performance in a $5,000 live account, and you get to understand one thing in this screen record: that it's not about lot size, it's not about amount, but risk percentage. If you look closely at the screen record, you notice that when I take a loss, none of my loss exceed $20. None of my loss exceed $20. That's to tell you that it's not about the amount or lot size, but having a fixed risk percentage. And if you watch this video longer, I will teach you how this fixed percentage of a thing works and how you can put it into working for you, the magics of this. Now let's move on to lesson 2, where you get to understand further about this risk stuff. Now, my 2 lesson is having a fixed risk to reward ratio, a well calculated fixed risk to reward ratio. You see, when I had this fixed risk percentage, my trade was still lacking one thing, which is a fixed risk to reward ratio. My risk to reward was very, very random, and I thought this wasn't going to be a big problem, but it made my trade leaks. It made my trade leak a lot, and let me explain further. You see, the common knowledge and the common study that you get here on YouTube is when you open a trade, place your take profit in the next support, resistance, supply or demand zone. In the next zone, just place your take profit here. That's not a bad thing though. I mean, it's not a bad thing, but here's the thing: sometimes some of these zones are either too close and won't give me like a good profit considering what I'm risking, or either sometimes they are either very far away, and that one is not also a bad thing. I mean, ideally it's not a bad thing that take profits far, but here's the thing: sometimes when I open a trade and the trade, after running in deep profit for hours, days, sometimes week, it will just reverse on me. And if I didn't break even or didn't come back early to close the trade will close and lost. See, after days of seeing it in profit. So this wasn't good for me. It wasn't good for me. It wasn't good for my growth. It wasn't good for my mental health. And this once again made my trade look scattered. I had to do my calculation and mathematics to come up with a suitable risk to reward that will suit my risk percentage. That will suit my risk percentage, that even if I lose, even if I win 4 trades out of 10, I'll still be in good profit. Understand? So the best risk to reward that I came up with after my mathematics was a 1:3. That is risking 1 to get 3. Now here's the point where everything makes sense. Here's the point where you get to understand how risk to reward, a fixed risk to reward and a fixed risk percentage works hand to hand, and it helps me stay in profit at the end of the day and not bridging my account. This is a very simple mathematics. So right now I want you to get your calculator and your pen. Let's do some maths. For this example, I'll be using the old me that I used to risk randomly for this example. Now let's say, for example, get your pen and paper. Let's do some mathematics. Let's say, for example, in 10 trades, I risk a random amount of $50 and $20. I'm going for 1:3. Now in 6 trades, I risk $50, and in 4 trades, I risk $20. Understand? Then 6 of the $50 was a loss, and 4 of the $20 was a win. Then we'll do $50 times 6. That will be $300 loss. Then the wins will be $60 each. Remember, each trade that we take will be going for 1:3. So the wins will be $60 times 4. So we'll do $60 times 4. It will be $240. $240 minus $300 is $60. And if you're trading a $5,000 account, that's a minus 1.1% in a $5,000 account. You are down $1.1 or 1.1% in 10 trades. But let's do this mathematics again. This time with a safe fixed risk percentage and a risk to reward. When I say safe risk percentage, I couldn't risk $50 of course, because that's like 1% of $500. And if bad days is to hit you with 10 loss in a row, that's $500. And if you're trading a profit account, the account will be gone. So that's why I choose 0.4. It's more safer. Now let's use this mathematics again now with a safe fixed risk percentage of 0.4 and a target of 1:3. That is, we're targeting any trade we take, we'll be targeting 3. Now let's say we take 10 trades again. Let's use that 10 trades of example again. We take 10 trades again. Out of that 10, 6 was a loss and 4 was a win. Remember, we're risking $20 in each of them. Now you do $20 times 6 lost. That's $120. And the wins will be $60 each. Now you do $60 times 4. That's $240. $240 minus $120, you still have $120 left. And in the $5,000 account, that's a plus 2.4%. You're still good in it. You're still good in profit. So you understand how this two works hand to hand. I don't know if are you understanding how these two things work hand to hand, and you understand how me myself I put my trading like a business, I treat my trading like business. You understand? So that's why it's important to have the two. Now if you're still watching this video, please, I want you to watch this video to the very lesson 5, because in that lesson 5 I gave out a knowledge that I myself I can't just easily give it out. I just keep it as the last part of this video to reward the people that watch my video to the very end. In that very end video, I'll just give you an expo. In that lesson 5, I gave you secrets of how to scale an account, how to pass a profit account, the app you need, the journaling app you need, and stuff you will be needing. So it's just a secret that I want to reward people that watch my video to the very end. So with that being said, let's go to the lesson 4. Now number 3 here is ego control. Ego control. You see, this particular topic is not what many people do talk about here, and even those that talk about it here on YouTube, they don't really like give us a relatable solution to it. Now here's what worked for me. You see, many people come online searching on how to control their losses and their bad times. They think bad times and losses are the only thing that needs control. But what we don't know, and what I myself didn't know then, was that lack of control over your ego can turn our good days ASAP into a very bad one. Let me use me and my experience for example, so you understand better. Now for this example, I'll be using the old me and the present me. The old me, the me that I used to be before, and the me that I am right now. Now the me that I am right now, I'm that trader that when I take 3 wins in a row a week, or 5 wins in a row in a week, While ideally other traders will tend to start increasing their risks into something bigger and start feeling invincible, I myself do the contrary. See, anytime I take 3 wins in a row, I start reducing my risk percentage from 0.4 to 0.35, which in a $5,000 account is $15. It's not fear. It's not fear. Don't understand. It's not fear, but rather control over myself and maintaining what I already have. They say protecting your capital is very important. Now, let me tell you the side effects. Let me not tell you the old me. And I will tell you the side effects and effects of feeling invisible and uncontrolled ego, the effect that it does to me. You see me back then, anytime I allow my wins judge my next trade, and I start increasing and sizing up big, that is increasing my risks to maybe 100 or something on a normal day I can't risk. These are the unhealthy side effects that this action causes me. Number one is zero peace of mind. I don't have peace of mind anymore. 2 is uncontrolled fear. 3, I check my chart 247. 4, watching my hard work, my days of hard work decline and disappear in minutes. It just made me close the trade even before it hits SL or even before the trade runs in good profit. You see, and if I close that trade in loss, another problem starts. 1, I start getting emotional. I start regretting. I start feeling like the market stole from me. I start feeling like the market owns me, and I start having FOMO. You see, my next trades will start being more of emotionally pushed towards something rather than logics. My discipline will disappear because I risk something that I can't afford. You see, and once again, I will show you proof of my good days when I take wins in a row, and you will notice in my chart. I will show you the screenshot. You will notice how my profits went from $60-$70 target to 45, 40, or 38. That's because I reduced my risk percentage so to control my ego and maintain what I already have. Do you understand? Now listen, I just want to be real with anybody that is currently watching this. I don't want you to think that I'm perfect. I'm not perfect. Everything you hear me saying, I drop on this channel, it's a personal experience that I looked for ways to resolve. I searched on YouTube and nobody was giving me a good help. That's what I'm bringing here to you guys. That's one of the reasons why I made this channel, to share my struggles and how I overcome challenges. So don't think I'm perfect. Understand? Now, moving on to lesson 5. Now, this number 4, we're doing a little experiment, and I want you to pay close attention because this is a life lesson. For this experiment, I'll be using a bottle of water. Now, look at this bottle of water. When I hold this thing like this, it's not heavy at all. I can hold this thing, like my muscle can carry this thing very, very well without a problem. You understand? But when I hold this thing longer than I should, what happens? My hand starts dancing. I can no longer hold it. It's not that the bottle of water gains weight over time, or it gains some kind of spiritual weight, but my muscles start getting weak. It starts getting weak. Now, why am I showing this? Listen, anytime you hold on little problems, anything in life at all, you hold on little problems for long and just call it a little problem, it starts costing you more than it should. Both in trading, all those small things they will tell you to do, you journal, you should do this, you call it a little problem. Once you keep avoiding it for a very long time, it will start weighing weight on you. Now, I want you to use this experiment in everyday life, anything you do. Avoid those little things you know you can solve. Just solve it and let it pass, because once you leave those little things, it becomes a big thing. And this experiment I just did right now, we're going to be using it in this lesson 5. I did this experiment for this lesson 5. Just like I promised, this lesson 5 is not something you can get on YouTube, something that anybody will give you out here on YouTube. So I want you to watch this video to the very end. This number 5 is more of me giving you a knowledge as a gift to say thank you for watching this video. Now, Before I hand over this knowledge to you, there are things I will tell you things that you need and how to put them together to help you. This will help you scale accounts, not just accounts, it also help you pass profit. Trust me. And number 10, one thing you will need to take to acquire this system, this knowledge is one, you need a system, a systemized edge that has proven itself over time. A system that will feature good discipline, good risk management, and a simple, clean, repeatable strategy. If you don't have a strategy, that's not a problem. You can learn. There's a lot of lessons here. There's a lot of good information here on this platform, YouTube. And you can also learn from me. Just click that subscribe button and I always share you my system. But there's one thing I want to say, guys, about strategy. Listen, for those of you that will learn strategy anywhere, no strategy works immediately you start using it. It takes some times of efforts, and sometimes some of them doesn't work exactly the way it's been taught to you. Sometimes you don't even just need to put it exactly the way it's been taught to you. It's just left for you to go back test and refine it down to suit your personality. That's how strategy works. And the number 2 thing you need is a journal. I will tell you the reason why you need a journal and what you'll be doing with this journal. If you don't have a journal app or you don't know what a journal app is, you should use this app. If you don't have a journal app, use this app. Or if you use an iPhone, use this particular app, because that's what I use sometimes. Or if you're a lazy type like me that doesn't just like to type, then start taking screenshots of your trades before and after any trades. I'll tell you what to do with it. Just keep listening. Number 3 thing I want you to get is winner's mindset. Winner's mindset. And this is what winner's mindset features. Winner's mindset number 1 features not overclouding your chart with too many confluences. Winners charts are always very, very simple, clean, clear, and very, very repeatable. Their trades always look alike. Because some of you only have three indicators. Only you trade support and resistance. Only you trade trend line. Only you also want to trade a moving average and support and resistance zone. Always overclouding your chart with too many confluences, and it makes your trade never look alike. And when your trade doesn't look alike, it's very, very hard to study the trade. So winners don't overcloud their trade. Now, winners mindset number 2 is knowing that you don't have to be right all the time. You don't have to be right all the time, and when you're wrong, exit immediately with a reasonable SL. That's the reason why you need an XL. Winner's mindset number 3. Winner's mindset is knowing that you don't count every trade or any setup as a win, but rather a probability. And just like saying you don't count your chicks before they hatch, because this will help you control your emotions after the trade. It will help you control your emotion and action when the trade is a win or a loss. And number 4, you have to stop blaming nothing for your action and start understanding that market owns you nothing but experience and hard lessons. You understand? Number 5 is winners don't chase a trade when it misses entry. They simply close the trade because they understand that opportunity surplus in the market. Now, number 16 that winners mindset feature is understanding and protecting your capital at all costs. You have to understand that it's not about quantity but quality, and protecting and maintaining what you already have. Understand? Now let me now tell you how to put these 3 things I just talked about, not just these 3 things, everything I've been talking about in this video, how to put it into action and make it a working system. And before you deposit in a live account, before you purchase any profit from account, listen, I want you to do this for yourself. Do this for your career, your trading career. I want you to get a $5,000 demo account and implement these things that I'm going to say further from now. Implement it exactly the way I'm going to tell you, and you see the magic, because it worked for me. Number 1 thing I want you to do once you get that demo account is trade that system you've learned. Whether you learned it from anybody, whether from me or anybody, I want you to write those systems down in a clean, clear, simple terms, in a repeatable, simple terms, because that's what you'll be using, that's what you'll be trading in this $5,000 demo account, no other strategy. Now, number 2 thing I want you to do is to use exactly and nothing higher or lower than 0.4 as your fixed risk percentage and trade 1:3 and make 1:3 your risk to reward target in every trade you're going to be taking in this $5,000 account. Number 3 thing I want you to do is I want you to aim to make 10% of this $5,000 account, which in $5,000 account is like $500. Yes, $500. I want you to aim to make $500 in that $5,000 account without losing $500, which is another 10%. And I want you to also say this to yourself. I want you to say this to yourself if I can't scale this $5,000 account to 10%, if I can't scale this account to 10%, then I'm not going to be risking my real money. That means I am not ready yet. I want you to be honest to yourself. That's the reason why I did that experiment at number 4. I want you to be very, very honest with yourself. Don't deceive yourself. Number 5 thing I want you to do, which is the reason why I asked you to get a journaling app or take screenshots of your account, of your trade before and after the trades start moving. Either you create an album for it in your phone. You understand? Now, number 5 thing I want you to do is study your trade after every 10 execution. Study your trade after every 10 execution. This studying your trade is something that I used to overlook until I started doing it and I started understanding. This will help you know if you are moving forward or if you are going back. It doesn't matter even in those 10 trades that all of the 10 trades was a loss. Just study it and see where you made a mistake, where you thought of, where your mind was telling you, no, you shouldn't have taken this trade. Yes, you should have taken this trade. What was happening at that time? Was it that you were predicting something else and another person was predicting something else? Just study every trade. This will help you understand yourself better and the kind of person you are in every trade, in every 10 trades. It will help you keep you in track. It will help keep you in track to also know when you are going off track. It will also help you to know when you're going off track. Now, the next thing I want you to do is make 6 trades your max trade limit for a week. That is to say, a week, the max trade you can take a week is 6. It's not most that you take 6 trades, but the max you can take is 6. It doesn't matter even if you take the whole 6 on Monday. And stop jumping from time frame to time frame looking for a trade. If you don't see a clear setup from the first to time frame that you're comfortable with, go to other pairs. You understand? I want you to stop checking your charts consistently, because checking your charts consistently will make you disobey these rules. Because I want you, this particular one I just said now, this is max trade limit. I want you to have it at the back of your head anytime you open your chart. Just treat it like something that if you take more than 6 trades a week, they will collect the account from you. I want you to have it at the back of your head, because this will help you when you have this kind of limit a week. It will help you reduce the way you watch at your chart, because when you watch your chart 24/7, it will always make you to take actions that you understand. Now, so the very last thing I want you to do is, when you achieve this 10%, if you are able to achieve this 10%, I want you to sit back and reason and look at how long it took you to make 10% of $5,000. I want you to reason the struggle, the fights, the ups and downs. Because if you are honest with yourself, only then will you understand. If you are honest and did everything I asked you to do, and not just do random things when your emotion plays in, only then will you understand that trading is a journey, and understand that you can't pass anything overnight. You don't get any good result overnight. Every good result is always a journey. Because the reason why many of us blow accounts, the reason many of us breach accounts, it's because we want to do it over time. We want to pass the account in 1 week. We want to pass it in the next week. We want to pass it. Immediately you just get the account pressure. But when you sit down and just do these things I just asked you to do, you get your confidence will be 100%. You understand that this thing overnight, it's not possible. It's never possible. If anything happens overnight, that thing will never stand long. That will never stay long. That won't last long. I'm not just saying this just to talk. This is a personal experience. This is what I said to myself 2023. I started this forex trading 2020. You can imagine 2022 was when I started becoming profitable. That was because I say something to myself at the beginning of 2023. I say, if I'm not profitable this month or this year, I'll be going off trading. And what did I do? These exactly things I do. My own took me 4 months. Yes, 4 months to get 10% of a demo account. 4 good months to get 10% of a $5,000 account. After like 2 try, after like 2 failure. Because anytime I fail 100, I just restart. Anytime I just fail more than 10%, I restart. I was very, very honest to myself. And that's why anytime I get profit in my account now, sometimes it takes me like 2-3 months. The highest profit I've passed is like a month. I'll show you the prof firms, the challenges. Like, okay, I've lost some screenshots. I will look for my screenshots. I'll show you the prof firms, my journey in prof firms. I'll show you the screenshot of the accounts that I failed. You see the days difference between the ones I failed and the ones I passed. You will notice the difference in days. That was because I was in a hurry to pass the account and start making money. So this is a lesson. This is a lesson that I just want to give you, and I hope you found interesting. If you watch this video to this very moment, I want you to comment in the comment section. Say, I must succeed Ezimax. Say, I must succeed Ezimax in the comment section. And if you like this kind of video, just subscribe to this channel, because I'll be bringing more of this. But for now, it's your boy Ezimax. See you in my next trade, in my next upload.